Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 29th, 2017. In this video, I wanted to take a look at IHI. This is the iShares Dow Jones U.S. Medical Device Index Fund ETF, obviously holding medical device companies. And the purpose for this video is twofold. Number one, I wanted to do an update to that trade and share some additional thoughts that I have on this trade. I may actually pull this one early. We're profitable by a very small amount. We entered this one. We're almost pretty much at the entry price. It's gone pretty much nowhere. You know, we were a little bit profitable, jumped back up, and we're about where we shorted right here after the breakdown. So profitable as of now, but this is the other part of this video. I wanted to cover some individual trade ideas, and I may add those on if I get a few of those out there on the site as official trade ideas. I may pull this trade, even if it's still profitable. I mean, that's up to you. Obviously, if you prefer to ETFs and you want to leave it on, I try to incorporate as many ETFs as official trade ideas on the site as possible because I know some people are adverse to trading individual stocks because of the risk of a gap on earnings or any news or anything like that. Obviously, those any individual companies having a large opening gap one way or the other, that's going to be mitigated in an ETF like this. I'm showing on my watch list over here, there's about, at least according to this charting service, 54 items in IHI. So you have safety in numbers there. Now that it can work for you or against you. Now, as I often talk about, and I use the example of the broad market, and you're shorting the S&P 500 or the SPY or going long the SPY, is that you're going long. When you go long the SPY, you go long the most bullish and the most bearish stocks and sectors. The SPY is so diversified. You have utilities, everything else. Now, where I'm going with this is IHI, although it's a sector ETF, there is a lot of disparity between the charts, and that's the point I'm going to impress in this video as I run through 30 stocks real quick that I've highlighted that stand out. The remaining 24 in the sector, I just don't have much of an opinion on. The charts are not really indicating which way the next direction the stock's going to go. So I wanted to go over that. Some of you might find some of these trade ideas actionable, and you may take those. And again, I may put some of those on there. And again, since there is quite a bit of disparity in the charts, some looking bullish, some looking bearish, more looking bearish than bullish. And that, again, that's one reason I have IHI on. I even did a video on it recently before the official trade idea. But then you have other sectors, such as, for example, the gold mining stocks, and within that sector, they tend to have a very high correlation. In other words, they tend to move together when there's a rally. GDX or the miners are rallying strong, nearly every component's going up. And any day that GDX is up a big day like yesterday, you're going to see all the gold mining stocks up for the most part. Very rare to see even one or two down when GDX has a big strong a strong up day, I should say. And obviously it cuts both ways. GDX, if it's in a downtrend, most of the miners will be falling. So let's dive into the charts. I'll press that point and then hopefully share some trade ideas that some of you might be able to profit from. MDT, Medtronic, and as I go through this list, just I've sorted these in order of market cap, starting with the largest, Medtronic here, at least the ones that I have flagged. And where that comes into play is, you put a higher weighting when you have these larger market cap, the stocks in the sector, they typically have a higher weighting within that index or that ETF. So there's the relevance there. MDT, Medtronic, this one's again covered in the video. We had a beautiful, beautiful chart pattern, and that's what I like about a lot of these stocks. Technical analysis works really well. You had a double top high here. You had a bearish rising wedge, which broke down at the right after the double top. You had negative divergence confirmed at that high, and as the charts indicated, clearly this one played out so far for a correction. You can see these are all support levels. I even had them back here in the past in 2016 when I did an update on this sector. You bounced off support and you took this one took the next leg down to this support level here, 79 area, and it's so far found support there for a few days. may that could be the end of the run. I wouldn't short this one here. There's not enough meat left on the bone, nor would I go long. Some might want to game a bounce here. I looked at the 60-minute chart and I don't see a reason to go long right now. In fact, I favor a continued move down here to 76.40. But again, not the risk reward isn't attractive to me because it's so oversold at this point. You can see the RSI down here on the daily chart, and you don't even have to look at the RSI to see the stock is oversold with that sharp move down. So again, the risk to be caught in a short squeeze or reversal doesn't make shorting that extra, what is that, another almost 4%, not even, yeah, about 3.5%. It's just not worth it. All right, so now, what it does tell you again is that here's a stock that has clearly topped and is clearly in a downtrend. And again, it's a $107 billion company, so one of the larger medical device companies. ABT, Abbott Labs. A couple things here that stand out to me. If you look at the white lines, you can see the divergence. We had a divergent high here, pushed up to make another second consecutive divergent high. So we have double negative divergence at the highs. That started to play out for a pretty sharp correction. We had this minor uptrend line here. Not crazy about that minor uptrend line, but I have it up there. That may or may not come into play. And then what does stand out to me as well in the blue colors here, I highlighted what could be a potential head and shoulders topping pattern with your left shoulder right here, the head right here, and the right shoulder. Now, a lot of times on head and shoulders patterns, I like to get ahead of it. Most traders, the conventional wisdom says to see if a right shoulder is formed. Ideally, you want to see volume expansion on a move down. Then you have your right shoulder, and then you have a fully formed pattern, and then you wait for a break of the neckline. That's again, the traditional entry on a head and shoulders pattern. But when I see one that looks pretty well defined, well formed so far, and the sector is also confirming that we are seeing tops in a lot of these stocks. I like shorting right above the formation of the right shoulder, a little bit above it, especially once we've turned back down. Uh, that way, if the symmetry of the pattern's taken out, then it's obviously not going to play out as a head and shoulders pattern. So what happens, you get a much more favorable entry there. Shorting right now where we're at today, just if it does play out down to the neckline, that's about 3%. So you're getting a 3% jump on the trade if it works out. Your loss, if wrong, is very small. It's about 1.5% or so to the upside, where you place your stop. And if the trade pans out from here, you're talking a move down. This would be my price target around $46. You're talking about an 8% drop. So to risk a 1.5% loss for an 8% profit, that's a very attractive risk reward. All right, TMO, Thermo Fisher Scientific. This one has, as you can see here, marked a divergent high, clear negative divergence right here on both the PPO and the RSI at the most recent high. That led to we had a gap down that started the correction really after one red candlestick. And what I'm watching here is this trend line. We have one reaction here, a couple reactions there, some reactions there. So a break of this trend line, and then you can see some support there around just above the 170 level. And ultimately, I think this one works its way down to 161. So again, that's 1, 2, 3 so far, the top three that look more bearish than bullish to me. Striker, another big one. Very, very nice bearish rising wedge pattern. You can see it there. Not really a whole lot to say on that. There's a negative divergence that confirms the bearish nature of the wedge, just as it did back here at this point in time when we had that nice drop there. And this one's hit my first price target for support level. It's consolidating. That's typical when a support level on the initial tag from above consolidation and or bounce. This one's really not bouncing very much. It's just consolidating and probably ready to break down and take the next leg down. Ultimately, I think this one has the potential to work its way all the way down here to 123.67. And if so, that's a drop of about another 11 or so percent. BSX, Boston Scientific. You can see back here, bearish rising wedge, divergent high, like a lot of the things I'm showing you on some of these stocks right now, not necessarily BSX, although I might be able to draw an alternative trend line here, but you can see that one played out well. And we had a divergent high at this point. These are the key features right now in this chart. You can see the negative divergence, prices have rolled over, and we have this uptrend line to watch, and a break of that uptrend line will bring us down most likely to somewhere. I would say I'd have to add another line here. Let's move that old support line there and tell you about right here would be my ideal target, 24.36. So that one does look like it's heading lower, but again, you need a catalyst. You need that break of that uptrend line. ISRG, Intuitive Surgical, nice looking chart. Bearish rising wedge, pretty well defined. Negative divergence. That divergence is about to be confirmed on any more downside. You can see the bearish, pending, I should say, bearish PPO crossover, and that will, at least in my book, confirm that negative divergence. You have a little, it's a very significant support level. I shouldn't say little. That 922 level, a lot of reactions on that level, on that line. So this one. I do expect a breakdown. I do expect a reaction here. Um, Not that I would game it, and I expect that level to get taken out. And when it does, that will be a very powerful sell signal. So that's sell signal number one. One way to play this is maybe short a half position there, and another half when the 922 level is taken out. And looking at the volume price histogram and everything to the left of the chart, it's just nothing but thin air all the way down here to this gap back from looks like April or so. And that would be from right here. I like this one so much, I might even take it pre-breakdown. That's about an 18% drop. And if the gap is backfilled, you're talking about 21, almost 21.5%. So a lot of meat on the bone on that one. BAX, Baxter International, negative divergence right here, rising wedge, breakdown, little kickback rally, snapback rally. You could put a minor trend line there and short that one on a break of that trend line. There'll certainly be some stops or little bumps along the way, but ultimately, I would say my minimum target on this one would be right here. That's about 53.62, which from where we're at now, it's about a 13% drop. And I can see this one possibly going all the way down here, about almost a 20% drop, down to about the 49.30-ish level over time. EW, Edwards Life Sciences, just beautiful, price action back here. Must have been something I covered in the past in a video. I don't know if it was an official trade idea or not, but gap down. And oh yeah, I guess I did have it on there because it said any limit orders would have been filled at that price. So we hit the second target there, and there was divergence. It's not marked here. You could draw a line right here and right here. Positive divergence at that low that led to this rally. And here's another double topper right here. So far, potential double top candidate. We had a reaction there, almost there, close enough. You don't have to have the exact penny, and this one's rolling over so far. And here's a potential uptrend line to watch right here, and it comes in as well with this support level. So not one of my favorites, I have to say that right now, but one that I do believe most likely is going lower. ZBH, Zimmer Biomet Holdings. Well, this one again already played out, and that was back in 2016 when I was bearish on the sector. And we've had this nice rally, and then boom, breakdown. There was a fairly well defined uptrend line, very impulsive breakdown, and what it appears to be right now, it's not a pretty looking chart because this one's below former support level, which now becomes resistance at about 114.70, and it appears to be flagging or forming a bearish pennant. This would be your flagpole. I mean, that's a very powerful move. If that flag plays out, this one's going a lot lower. That's your flagpole. You take the flagpole, add it to the pennant or the flag, and you're talking pretty big drop on that one. So it could certainly firm up the bullish case or the case that this one, the move down is over if it can get back above that level with conviction, start moving higher, foil that flag pattern. But until then, that one could get ugly. IDX Laboratories, nice, clean, long, the trend line goes all the way back to the early 2016 lows. Negative divergence at the highs right here. Breakdown, the breakdown was impulsive. That's something you want to see on a breakdown. Helps to confirm the validity of that trend line, the validity, excuse me, of that trend line. And you can see that there very much so. Impulsive selling on that big red candle, follow through. It's sort of consolidated since then. It's been digesting that big drop down. So what you want to see is what happens here. Will it break down from this consolidation range? If so, you can see my targets here. And I do think, just based on the chart, it'll hit at least this 140 level. It's at 149, almost 140, almost 150 right now. That's about another 7% drop. And ultimately, I can see this one working its way down here. That's about an 18% drop. HOLX, here's one that I think it's already played out for the full move. You can see this uptrend line, rising wedge, or not rising wedge, more of a contracting channel, negative divergence, divergent high, and so from the highs, this one's already dropped about 20%, and this helps reinforce my point that if you're going long or short, in this case IHI, you're also going short this stock. I don't see a lot more downside. Anything's possible. It's clearly in a downtrend and it could lose this support level, but I think the bulk of this move has already played out. And whether it reverses here or not, whether it breaks that support and heads down, the risk reward to being short or even staying short this one, or shorting it here, I should say, or staying short, it just isn't attractive. TFX, Teleflex Inc. Nice trend line, rising wedge, breakdown, impulsive move, and then an impulsive back test, kick back. We failed on the back test and have been moving lower since. This one, in my opinion, is coming down here to at least 191.50 area. That's another almost 8% drop, 7.5% drop. And if things get ugly in the sector, I can see it coming all the way down here to the 170 level. That's close to an 18% drop from where we're at. STE, Steris. This one, just what stands out to me, is a stock with a series of uptrend lines. And when these uptrend lines break, you see an impulsive rally. So as you can see here, almost like an ABC correction. ABC. There's your uptrend. Uptrend line broke down. We had a little kickback rally. Nice correction there. And these corrections give back, at least it's been the case, almost all of the preceding advance. So again, and it goes the other way too. Here's the downtrend line, breakout, rally, uptrend line, breakdown. That one actually gapped way down, kicked back to hit the trend line again, test it, and fell back down. So again, it's a stock that trades very well off trend lines, and you don't even have to. I'm not factoring in any of the divergences or anything else. Here's the primary uptrend line. This is what I'm watching right now. This primary uptrend line. That's a big one, by the way. Bigger they are, the harder they fall. There's some minor uptrend lines. You can see how well, even if just trading these minor trend lines for little quick pullbacks. But when this big one goes, we do have a pretty important support level just below. Let me give you that level. That's at 83.40, give or take. So if this trend line breaks, and especially that 83.40 level, this is my target on this one. I think it's coming all the way back to about the 77.40 level, and I think it'll get there relatively quickly. That'd be almost a 9% drop from where we're at right now. DXCM, Dexcom, this one, for whatever reason, it's in a downtrend. There's the downtrend line, but I favor a breakout. I think this one looks like it wants to eventually break above that downtrend line and run up here, maybe challenge those old highs from back in 2015. So not one that I care to short, even though it's in a downtrend. Just trying to make the point that I don't see a very bearish chart when I look at this one. ABMD. This one has a nice uptrend line here that's just broken down below. You can see that. We also had a divergent high. I didn't have it drawn out here, but I can do that for you right now. There's the divergence, negative divergence, and targets. I should have marked this chart up. This is a minimum target right here is 140.18. That's where I expect the first reaction to come into play. I can see another reaction here about 134.90 or so. But ultimately, this one may work its way down to, it's hard to say really right now. I'd have to study the weekly chart as well. Uh, Maybe as low as this 104 area over time. Bio-rad Labs, look at that uptrend line. very well defined. A lot of reactions off that trend line. Negative divergence at the highs. Again, these stocks tend to play out very well to the technicals. That correction started off with a bang. It started with a gap down. That gap came back in, made a perfect back test of that line. You can see that on the day of the gap somewhere down here. Kissed back test the trend line, kissed it there, rolled back over, hit this support level here. This is a support line. We had this reaction back here. As soon as that goes, and I think it will based on the scope of this pattern and the divergences, we're heading down probably to this level here. I'd have to firm up some price targets, but I could see a move down to call it the 195 area. Maybe another 10% or so in that stock. HRC, Hill-Rom Holdings, another nice clean bearish rising wedge pattern. You had that one. I wish it was on my radar at the time. Broke down and gave you an entry right there. We had an impulsive breakdown. It was still objective. The following day, it gapped down, hit support. You can see that previous reaction low there, previous reaction high right there, well-defined support level. So, on scale 1 to 10, this is a 10 for the technical analysis, for trading, everything else. Again, I wish I would have had it at the time. I may have covered this in the recent video that I did a couple month or two back. But again, you can see that would have given you an opportunity. You could have covered short the next day, had a standing buy to cover order right there, got out, sidestepped this whole sideways grind. And, if this one continues lower, it's probably going down. Just looking at the volume price histogram and some other things, I'd say coming down to this reaction high back from 2016. That would be another drop of about 15%. MASI, Massimo Corp. There it is. And what else to say? Divergent high, powerful correction following that divergent high right there. Came in, hit the uptrend line. It's been walking up the uptrend line since April. Finally broke down again, impulsive. See, this is what I'm talking about. This is technical analysis. You see these breakdowns. They are confirmed with these impulsive candles. This one was, you might have had it. Yeah, you did have a minor uptrend line right there, but it was really the divergences that just took its toll on this stock at that point. It's dancing on this support level. This is the magic number right here, 82.33-ish, and it's starting to crack below. Hasn't moved down impulsive yet, but I think I'd have to take a look at the 60-minute chart. And again, this one might come on as an official trade idea if I can confirm it with the 60-minute, because there's a lot of thin air looking at the volume price histogram, meaning we just ramped up quickly here. Thin zones are often backfilled just like gaps, so there's a lot of meat on the bone on this one if it gives this level up with conviction here. You're talking a drop of, what is that, 20 over 25, 26%. PODD, Insulet Corp. Not crazy about. There's only a few reactions here, but you can see a divergent high. So there's a trend line to watch. Not one of my favorites, but again, one that I think is heading lower. NUVA, Nuvasive. Let's see this one. Here's one I wanted to point out that I see a potential divergent low. I see a stock that's already played out. First and foremost, the bearish case, it was there to be made. You can see the bearish rising wedge. Gap down below it, denying anybody an objective entry unless they were already short in anticipation. And that's something else. I talked about the head and shoulders pattern. Sometimes I'll short those in advance. When I see a clean bearish rising wedge, and a lot of supporting evidence to say it's going to break down, a lot of times I'll position within the wedge, ideally at the top of the wedge, sometimes in the middle. Didn't do it on this one, but yeah, obviously wish I would have, because you could see that big gap down out of the wedge. Now that gap down was too large to offer an objective entry right there at that point in time, but it would have still played out. You had a kickback rally, and it took another leg down, and each of these are support levels. But where I'm going with this one is this is and would have been my final target around 56, 57, and you can see we're not far from it now. And if we get there, if we take one more leg down, we'll have put in, if it happens soon, that is, we'll have positive divergence. So we'll have a stock at my final target with bullish divergence, and that's one that I would expect to bounce. It might even go long if it gets there. It's hard if the sector overall is bearish. I probably won't take that long or put it as an official long trade idea, but I can tell you that I certainly wouldn't short it or stay short at that point. And if I had to pick one or the other, I'd be long. And again, that's things like that, and that's why I'm going over those that don't look bearish or actually might look bullish soon. it goes back to what I said at the beginning of the video. IHI gives the ETF some headwinds if you have quite a few of the components rallying or not falling in line with the rest of them. So therefore, you can do a lot better, in my opinion, shorting these names that I'm highlighting as the most bearish versus even if you have to take a dozen or more versus going short the ETF. PEN, Penumbra. Let's see, we have this divergent high right here. We had a divergent high number one, second consecutive divergent high. It should be right there, these divergent lines, because that's where the high was. And that's it. Here's a long-term trend line, goes all the way back to 2015. Break of that trend line is a sell signal on that stock. GMED, Globus Medical, steep uptrend line, bearish rising wedge, breakdown, back tested it just before the apex of the wedge and then rolled over. So sometimes you get that. You have a breakdown, a back test of the wedge. Back tests can be painful because they can come in at much higher levels, or you can keep back testing as this one did, but eventually the stock rolled over and came down to what would have been in I may have covered this one, I can't recall. This would have been my final target, so I don't think the risk reward is very attractive right now to be short or to short this one. In fact, you can see some potential bullish divergences here. If it puts in, maybe it'll undercut that level real quick, a little flush out move and then reverse. So this one I'm more bullish on at this point than I am bearish. INGN, there's one, looks good. Negative divergence, I could draw it out here for you. You can see the divergence, you see the wedge up top, well-defined long-term uptrend line, and boom, also horizontal support around 90.87 or so. If that level goes, I don't see anything stopping this stock till it gets down here at about 77.40. That is a drop of about 16%, and ultimately I can see it working its way down here to this 69.81 level. These are just rough targets right here, and they're not adjusted for an optimal fill. So if I'm going to short this one, I'll probably have my stop. I'm sorry, my buy to cover limit order. I'd probably put it just a hair above yeah, hair above 70 on that one. OSUR working its way up in this ascending price channel. Sell signal to come on the break below the price channel. You can see the divergence on that channel as the stock walks its way higher. And when it breaks, I think it's coming down to at least 1570, possibly any of these other targets there as well. BEAT, BEAT, telemetry, I'm sorry, rising wedge pattern, negative divergence, looks right for a breakdown. This one's right up by the apex, getting close to the sweet spot of the wedge. I'm sure I should say that, the apex, or where the two lines converge. This is the sweet spot of a wedge, right in here. This is about, if a wedge is going to break down, more often than not, that'll do it around this area here. And this one, I might even jump the gun on this one. Minimum targets down here. What is that number? I'll give it to you. It's 27.27 unadjusted, of course. So cover a little bit above that from where we're at now. You're talking about a 23% drop. So, you can short this one, put let's say, even if you gave yourself a 5% stop loss, that's still an extremely attractive risk reward ratio. Baby, BABY, there's one that I'd rather be long than short. I see divergent low, bullish divergence on the PPO. It's oversold on the RSI. Not that I'm going long this one, but I just wanted to point out that things like this that give headwinds to the IHI trade. CSII, cardiovascular systems, nice, pretty well-defined trend line there. Divergent high, negative divergence down below, breakdown. It's flirting with that $29 support now. If and when that goes, I see this one ultimately working its way down to 21. That's a pretty hefty correction for a stock like that. So you're talking about 27, almost 28%. ALOG, there's one divergent low. Well, again, more bullish than bearish, so I have no desire to short that one. CRY, CryoLife. This one's about the Crimea River. If it breaks this support level right here, 1775, you can see the divergent high there, and potential double top pattern as well right here. We topped out there earlier, so here's the story on this one. It needs to take this level out and take it out with conviction, and then also burn through the divergences. If it does pop above this level, the top of this sideways trading range here, uh, it will do so almost certainly if it does it soon on a divergent high. So I would not chase that long side breakout. In fact, I put good odds that that breakout will fail because of the divergences down here below. So that's one possible short entry, short a breakout if those divergences are still in place, especially if the breakout doesn't look too convincing, or wait and short on a break below the support level 1775. ARAY, again, another one recently put into divergent low, bullish divergences, and looks more bullish than bearish to me. Not anything I'd short. And again, it's not, even if I was neutral or even bullish on the sector, I don't see enough in this chart uh, to really provide an objective long entry, I should say. So I wouldn't trade it long, but I did want to point out that it could give headwinds to the IHI short trade. So again, if I can get a couple of these out there as official trade ideas, then I'll maybe roll out of IHI and into those as the official trades on the site. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.